Echo Partners Bank Ratings Report, Page 2 Overview. As we saw last time, Page 1 of the report focuses on balance sheet and interest rate risk, while Page 2 examines profitability, capital, liquidity, and asset quality. Both pages include the bank name, location, FDIC certificate number, web address if available, and the Echo Partners star rating. And again, for convenient navigation, each chart or graph is numbered within the report. Let's take a look at the Page 2 information, starting with Graph 1, Income Summary. The income summary shows the bank's most recent quarterly and year-to-date income. Graphs 2 through 4 focus on the areas of biggest managerial impact: rates charged on loans, and interest paid on deposits. The difference between these two leads to the net interest margin. The next row focuses on profitability. Graphs 5 through 9 each center on a particular aspect of the bank that has the potential to have a significant impact on the bank's earnings. This includes operational as well as financial indicators. Capital is the focus of graphs 10 through 14. Regulatory capital is measured by the three ratios shown in graphs 11, 12, and 13. To be considered well capitalized, a bank must have a total risk-based capital ratio, graph 11, of at least 10%, a Tier 1 risk-based capital ratio, graph 12, of at least 6%, and a core capital or leverage ratio of at least 5%. Capital is critically important for banks as it forms the ultimate backstop in the event of losses. Liquidity and funding issues are the focus of the following line, including graphs 15 through 19. Generally, this bank shows a less liquid position than the typical bank in its state. However, offsetting this, the bank has a better funding and asset mix, shown by graphs 18 and 19. Graph 19 shows a much lower ratio of long-term assets to total assets. Long-term assets are assets of at least 5 years in maturity and are generally considered those most subject to price depreciation. Finally, the bottom of Page 2 focuses on funding and asset quality issues. Graphs 20 and 21 examine the funding mix. Graphs 22 through 24 focus on asset quality. The asset quality results here are mixed. The bank has a loan loss allowance well below that of banks in their marketplace. Yet they have a higher delinquency, with non-current loans persistently higher than average. In this case, one might expect to see a higher loan loss provision. But instead, here we see that it is lower than the state average. Thank you for listening.